the stock portfolio and what we are doing in our stocks. And someone hit me up and was like, Lamont, can you show us how to buy a call on Robinhood? And so I will do that. Larry, can you see my Robinhood account?
I can. Yeah, it looks good. I might need a piece of that.
Yeah, we all need a piece. Hell, I need a piece of someone who has an account this big times 6 or 8 so I can do my app idea. So yeah, I want a piece of it too. But ladies and gentlemen, if let's just say I've been telling people to jump on the DraftKings stock, and I still think that it's not too late for DraftKings, but here's another good idea that I bought a long time ago. Viacom CBS. Take a look at this one. CBS is the one hosting the Super Bowl. So the way I put together these strategic ideas was I said, what's going to be happening in the upcoming month? Super Bowl is coming, hosted by CBS, major sponsors, DraftKings, put some calls on them. So that's what I did with Viacom CBS. And as you can see, it's not even Super Bowl day. I'm up $668. I bought this call January the 23rd or something like that. But if you wanted to come in here and buy a call, ladies and gentlemen, you first need to go check your Robinhood account and make sure you go into, let's see here, settings, because you have to make sure you have options turned on. And you would just come over here to this little tab that says options trading. And you see I'm at a level 3. You at least need to be level 2. And down here is where you can remove trading options. You have to make sure this is on. So some of you all, when you go to pick a stock, and let me get back up here into this screen. Let's just say you want to pick this thing right here that I'm telling you guys will be a good buy. Albemarle. It's an energy company out of North Carolina, and they've had a major pullback last week. And they're having earnings next week. And from what I've been reading, the earnings is supposed to be good. So if you want to, do a call to control 100 shares of stock because you can't afford 100 stocks, you just come over here to this tab that says trade. You click on that and you will click buy a call. And then you'll pick your expiration date. As I've told Larry and everybody else, I never like doing quick expiration dates unless it's something time specific. So you people that I'm saying go buy a call on Viacom CBS, only do 2 weeks on that one. And for you people that I'm saying buy a call on DraftKings, only do 2 weeks on that one because I think they're both going to peak for a little while within the next 2 weeks. But Albemarle, you might want to stretch this one out a little bit to give it some time to have a dip and come back up. So you definitely wouldn't pick February 19th. You come on down here to March 19th. That's when your call would expire. Now, unfortunately, these calls are expensive. And so the share price is $159 per share. And when you're buying a call, you always want the price to be one of these two squares. What determines whether you pick one of these two squares? How quickly you want to get out the call. So if I'm doing something on 2 weeks, I go right below it. Now, of course, that's going to cost you more. That's going to be 100. That's going to be $1,020 versus this one up here being $900. But you would also look at your break even. Your break even, if you took the $900 call, would be $169. Ladies and gentlemen, do I think this stock would be more than $169 by March? Hell yeah. It's going to be more than $169 by March unless we have some chaos in the economy. And with them 2 steps away from passing COVID relief and sending out $1,400 checks, the economy is only going to get stronger. So you would come over here, you click this button. Go ahead. You click this button. You'd also want to take a look at the Greeks. The most important thing you always look at when you take a look at the Greeks, ladies and gentlemen, is this implied volatility. If this is higher than 75, do not, and I repeat, do not mess with it. That's just trending a little too high for stops for my blood. And basically your implied volatility just simply means that there's a whole lot of increased activity on the stock, either buying, selling, or both. And the number is dependent upon the individual stock. So this number can be as low as 0, which is perfect, or as high as up to 2,000, which you stay away from. That's what GameStop was 2 weeks ago. It was like 1,000 and something. You definitely don't want to touch that. Keep this about 75 or lower. You would click this. You would click continue. And then you would come up here and you would click, you want to buy a long call, 1 share. Then you review your order, make sure this say good for the day, meaning that it's good until the day it expires, which would be March 19th. And this would eventually say, because I'm doing this in after hours, it eventually say, okay, you ready to submit? And ladies and gentlemen, you simply submit it and you put it in your personal records and you come back and watch it and see how it grows. And I always tell people, do not be afraid to take your profits. If this thing is making you $200, $300, $400 within the first week, do not, and I repeat, do not just sit on it. If that's enough income, yeah, y'all can go back to it. If that is enough income for you, $200, $300, $400, $500, get out, take your profits. You do not have to just continue to wait, hoping it's going to go higher. Nobody goes broke taking profits. What you got, Larry?
Can you hit sell a call and see what it is?
Yeah, same thing.
So if you were going to sell a call, now let me ask you, because that call is so expensive, would it not make more sense to just buy the stock? And if you have the money to buy the stock and then sell calls on it for the next month or two?
That you could certainly do. Well, here's the thing about this one. The issue with this one is it only trades, it only allows you to do options once a month. So under normal circumstances, your idea would work. But the other part of what you're saying is you at least want this to be something you believe in. For me, this is something I believe in. So I wouldn't mind doing your strategy. But at the same time, $1,000, Larry, is a whole lot different from $16,000 of buying.
No, I feel you on that.
From buying 100 shares of the stock. And so to control 100 shares of the stock, you're only going to come out your pocket for $1,000 to make 70% of however this 100 shares goes up. So that's why most people do this route, Larry, versus just buying the stock straight up.
Right.
Yep.
I guess I was thinking because if you sold a call, you would get the $9.99 premium. Plus, if it went to $169, you sell it at $169.
Yeah.
So you make the difference and the premium.
But the problem with that is you got to have 16 G's.
Well, yes, that's what I meant. If you have the money to do that, yes. Obviously.
Yeah. If you got the money to do it and you actually believe in this stock, and you want to put that as part of your strategy, absolutely go for it. But most people want to believe in the stock. They can't control 100 shares. That's why they buy a call. Simple as that. And again, ladies and gentlemen, if you're taking a look at my portfolio, my major plays, since we're not going to be doing the stock Monday quarterback program this week because we'll be at the Super Bowl, I would tell you guys to come on in here, get you some of this DraftKings. I bought it 2 weeks ago because of the Super Bowl. And right now I'm up $898. And hell, that's enough for me. The minute it's 9:30 on the dot, I'm getting out. That's plenty for me. I'm getting out of this one. And I'm also getting out of that Viacom I bought, Viacom CBS, which that call doesn't expire till next month. But because the Super Bowl is this month, I'm going to go ahead and get my coins. And this one is up almost $700. That's a sweet $1,500 profit for me that's coming Monday. And I'll just wait around on Monday to see how high it goes because I'm sure the buzz is going to be around these stocks. I'll just wait around and get out before Monday. But I'm definitely getting out Monday. But these are some plays you guys can take over the weekend. And if you're going to do something long-term, check out Albemarle. I like where they're headed this week in their earnings call. And I can easily see them going up at the very least 10%. So that's all I got for you people this week on the stock program. Larry, any questions, any concerns? What you going to be doing next week in the stock market?
I'm not sure. I was looking at a couple of companies. I was thinking about maybe, I've still been thinking about doing I've been doing some of my selling puts. I haven't really been doing the calls. I'll tell you, the calls scare me, man, because it's like, I know there's a lot of upside, but there's like unlimited risk. It's like, if it doesn't go your way, you lose everything. Whereas with
buying a call?
Yeah.
Well, then buy something cheap. Like for example, I bought Ford. In the last day of December because I
Okay.
like their CEO and I like all the stuff they're trying to do with EV. So I bought a Ford call, Larry, that lasts till next December. I
Okay.
bought a call that lasts till next January. And when you come in here and you look at what it costs to buy a Ford call, so you want to buy a call, it's only 33 cents.
Mm.
It's only 33 cents to hold it till February. So let's just say you want to give it some time to marinate. Okay. Let's say you want to hold it to September. It's only going to cost you $185 to control 100 shares of Ford, and your break even is $13.85 from now till September. I mean, you can do it on stocks like this, Larry. You don't have to do the top tier stocks, but at the same time, you don't want to do nothing that's lower tier either. But Ford, I'm telling everybody, get you an extended call on Ford. I mean, instead of just take this thing to January 2022. It's only going to cost you $230 to hold this stock, and your break even point is $14. Ford might be $22 by the end of this year, Larry. It might be $22. And you see my call down, you see that +1 beside 7?
Right.
That's the call I bought. I bought a $7 call. And it's already at $11.
Yeah. What'd you pay for it?
Let me see. Let me pull it up. Let me go back in here and pull it up. I bought it for a year, and I think I paid, it wasn't a lot, like maybe $300, $200. Here's my Ford call. $247 is what it costs
247.
to control
Right.
the share. And look, I'm up 250 already. That's a
Okay.
100% return on my money. So,
Right.
Larry, you can't go wrong with buying a Ford call that's you keep way out till next year. $200 ain't going to hurt you when I've gotten my money back from Ford, Larry, in less than a month. It's been
Right.
less than a month. So I
Right.
think that's one you could do. And there are some other ones, Larry, that are in that $10 to $30 space that you can certainly make some good money on. So don't underestimate the power of doing a call. But the key to doing a call, you need to make that call as long as you possibly can afford, because you want to give the marketplace time to go up, go down, and give you the opportunity to be like, you know what, $300-400 is enough money for me. I'm getting out. And like I
Right.
said, nobody goes broke taking their profits off the table. Monday, before the end of the day, I am out of Viacom and I am out of DraftKings with my $1,500 to $1,600. Out. OUT out. Get me up out of there. But that's all I got for you, ladies and gentlemen. I hope you all have a wonderful, wonderful week. Oh, okay. Let me answer this question. Castle Dragon 78, does Ford operate Lucid Motors? No. Lucid
No.
Motors is
It's part
supposed
of
to
a
be going
SPAC.
through a SPAC called
Yeah.
Churchill Capital. And
And they've been blowing up. I bought some of them at $18. They're at 30 something now.
yeah, let's take a look at Churchill Capital. Larry jumped all over them.
It's a CCIV. Yeah.
And we talked about them up here, ladies and gentlemen. It's just that I'm not a real big fan of SPACs and blank check companies unless I know who they're getting in bed with. And it's not 100% sure, but the guy that runs, the CEO of Lucid Motors, was on CNBC today. And when they asked him, will you be going in business with Churchill Capital so you can get on the market? He was giggling like a little girl saying, well, sounded like Mitch McConnell. You know I can't talk about that. Ladies and gentlemen, his ass lying. He know he's merging with them. He's merging with them probably in May before they launch the car. And the cars are beautiful. I mean, those are some beautiful luxury sedans. Their biggest one, it sells for $160, gets 0 to 60 in 3.2 seconds. Yeah, 160,000.
Yeah.
And it gets 0 to 60 in 3.2 seconds, which is not fast enough. My car does that. My Tesla does that, and I've got the base model. But it's bigger, it's more roomy, it's got great technology. And the guy was basically saying that the thing that's going to separate them from Tesla is their battery technology, because that high dollar car is supposed to get close to 600 miles on one charge.
Wow.
So
see what their calls are.
Oh, yeah, let me take a look at Churchill Capital's calls, ladies and gentlemen. While we got your attention, while we got you here, if you're trying to get involved with Lucid Motors, Churchill's Capital is who you want to jump on. They're pretty expensive. But, I mean, that's not too bad, honestly. I just would not be doing an expiration date of February 9th. See, they're another one of these companies where instead of having options weekly, they're only doing monthly. So let's take a look at March 19th, because you don't want to just have it. You don't want to have a short window with this stock. So if you want in on them and you want to control, you got to come up with $1,000. Basically, you're multiplying this number right here by 100. That's what you're doing. That's how you do a call.
Sell a put.
Let's see, sell a put till March. Oh, I mean, they're paying you $1,000 to sell a put. So this is actually a better idea to do for someone who wants to get involved. I would encourage you to sell a put on this stock till March. Start right here at number 25. Start at 25. The stock is selling at 34. Sell a put right here at $25. They're going to pay you $495 up front. Oh, hell no. Nope. Larry, why am I saying no?
I see the volatility rate, but here's the thing.
Nope.
That stock has to drop by $9 to get there. And if it does, you still own it at $25.
Yes, but when that volatility is
and your break even's at 20, which really means they have to drop by $14 before you're in the red.
That's true. But here's the problem. Let's say they do drop by 14 based on this high volatility. How long are you willing to sit there on that stock? Are you willing to sit there with it for a long time? Do you want your cash back?
Well, I want my cash. So let's check February. We'll see what the February 19th is, because that's only like 2 weeks away.
Yeah, it's 2 weeks away.
So they're going to pay you, if you choose a $30 strike price, they're going to pay you almost $400.
Yeah.
Actually, it makes more sense to go with a $35 strike price, because your break-even point's not that much difference, and you're going to make almost twice as much in the premium.
Yep, I 100% agree with that. 100% agree. Ooh, that volatility is even higher than the last one. Now, me personally, I wouldn't touch this. Not me. I'm not. See, I leave it to the risk takers like Larry. If I'm gonna take a risk, it ain't gonna be on that one. So, Larry, my brother, it's all yours, my man. It's all yours. And ladies and gentlemen, let me show you one more thing before we get out of here. So, I had calls. And when you want to get your money out of a call, let me show you what you do. Because I got out of 2 calls today that was scheduled to end later on in the year. So let me just go down here to I got a Disney call that expires the end of the month. All right. And I'm up on Disney right now, $500. If I want to get out of this on Monday, you simply go here to where it says sell to close. You click 1. Then you review your order, and then when it populates, it's saying that I have to set it at 12:10 because that was the last thing it registered at the market. And there's no getting around it. So you will update it, and then you review, and you will hit submit, and then they would give you this $1,211 that you subtract from this, which gives you your total return, which will be $468. And ladies and gentlemen, it might be a $2,000 Monday for me, because I might sell all 3 of them and get out of them. Nobody goes broke taking their profit. And Lamont Tyson is all about taking them profits. Get me up. And then I've got Microsoft call that ends the end of this month too. Let me see what they looking like, because I might get out of them too. So I bought the call on them. I'm up 345 on them. I'm gonna wait on them. I'm gonna wait. I'm gonna wait a little. I'm gonna wait. It's not gonna hurt me to wait a little while longer. Now, if this 345 starts getting down close to 200, then I'm getting out. Getting out.
All right. Now, one other stock I want you to look up, because their earnings are coming up.
Okay.
Is Under Armour.
Oh God. Oh my God. I mean, you would want to look up one of the most racist CEOs in all America, Under Armour.
That's what I was thinking about short though.
Let's see here. And your goal is to sell a put on them, or what you trying to
Yeah.
do with them? All right,
Yeah.
let's see what they're working with. So they've had a good couple of weeks. You're going to sell a put. So if you sell a put at this level, they're going to pay you $114, but
Nah.
you're going to have, yeah, exactly. Not worth it.
Nah.
And oh, hell no, no, no,
Nah. Nah.
no,
Don't like it.
nah. That volatility for them is just way too high. And it's probably because they're getting ready to have their earnings. Ladies and gentlemen,
Yeah.
you have to use this implied volatility and this delta as your barometers of safety. Now, if you don't mind selling a put and getting stuck with the stock and then sell calls on it, then do what you want to do. But if you're someone who you really would like to have your money back at the end of the week and not be stuck with the stock having to sell calls, then you have to concentrate on this implied volatility. Do not go higher than 75. And it just depends on the momentum of the stock and your knowledge of said company, whether or not you go higher than 75. So
yeah, see,
with
see
me,
some of these things. I don't mind the implied volatility being very high on some of these stocks that I like the Churchill Capital. I don't mind that. So I know the implied volatility was crazy high, but
yeah,
I mean the premium is very high, and the amount that they would have to drop. I mean, if it drops from 35 down to 25, I mean that sucks. But I would end up buying them at 25. And I get the $500 or $600 premium, whatever it was at that price.
right.
So I mean, that part doesn't scare me away so much. If I was buying a call, yes, it'd be different because I'm just putting straight out cash, and if I lose, I lose. Whereas with where I'm selling a put, if I lose, I still keep the stock.
Yeah. Okay. I feel you. All right. Let me answer some questions. Mike Willie, is it a good idea to get airline stocks? I'm still saying hold on that one. Just wait. If you want to get in on something that can give you a return now and also a robust return when everything opens back up, your best play is Disney. Disney's paying you now, and it's going to definitely pay when they open back up. Now, when we get closer to seeing like 50%, or I would even venture to say 45% of the nation immunized. Or
here's the thing, though, Lamont.
hold on, let me finish my point. Let me finish my point. Or when they get that app that verifies you having taken the shot, right before that point is when you want to get in on the airline. But short of that, I don't want your money to just be sitting there doing nothing for you until they start growing.